Hey, this is Jon Johnson with Gabriela Cernas-Frantz, and this is the Mortgage Market Mastermind with our special guest today, Shawn Miller.
Thank you for having me.
Nice to have you, man. Yeah. All right, so this is going to be the last one for the year. So we're going to go over a lot of topics. A lot of things have happened in the past 30 days or so. So we're going to get into this. We're going to try to knock out as much as we can as quickly as possible so we can keep you all informed on what's happening in the market. So step one, the goal of this YouTube page, the goal of my business is I'm trying to help people to become debt-free through home ownership. So buy a home, and after you own a home, be able to refinance, hopefully to be able to pay off all your debts. And then the final goal is hopefully getting towards a 10 to 15, 20-year mortgage and get that paid off so you can be able to be debt-free and be able to leave something for you, your family, and a lifetime of legacy. But before we get started, what is something in this industry that has been on your mind lately? Go ahead, Shawn.
Should I say interest rates?
Sure.
Interest rates are definitely, I guess they're always on our mind, but, more so of late than, in many, many years. We saw a large uptick in interest rates throughout the course of this year. However, the last 6 days have been very good. We've seen some very nice improvements. So thank you, Lord, on that.
Yeah, you can finally breathe a little bit, you know. You can finally have a conversation with a real estate agent or a buyer that seems more positive rather than when they ask you, it always has to be, nope, still going up, still going up. Now we get to be able to say, hey, it went down a little bit. But, interest rates, they kind of move in a stair-step fashion. So when they go up, then it kind of go to the side, go up, go to the side. So hopefully this was, the start of a downturn going that way.
Yeah, usually they go up fast and down slow. However, the last 6 days they've actually went down fast. So inflation went down. So when inflation is high, rates are high. When inflation goes lower, rates go lower.
You got it. I agree. And Gabriela, what has been on your mind in the industry lately? Hey, come on over, please. By the way,
we'll get all close together. Yeah. Really what's been on my mind is just how buyers are reacting to the market. We're seeing a lot of buyers who've been very hesitant about the rate increases. And so they are also pulling back on moving forward with whether it's house hunting. I was at an open house this past weekend, and there was a lot of groups coming in, and that was just like the resounding topic for them is like, we're kind of ready, but the interest rates. So they kind of go hand in hand.
Yeah, I learned this from Shawn. We preach monthly payment,
Yes.
Does the monthly payment work for you? And, when buyers get into our sphere, when they're trying to get pre-approved or they've already been pre-approved and are looking for a home, we're always preaching like, what is the monthly payment going to be? And then even more than that, how much interest are you paying over the life of the loan? People don't understand that, difference between a 6.5% rate and a 7% rate, it'll have a slight difference in interest over the life of the loan, but if somebody's really trying to play that game, you're more going towards a 15 or a 20-year mortgage than a 30-year mortgage if you're trying to play the interest game. So overall, for your average buyer, though, who's not trying to play the 15, 20-year game, what's the monthly payment? Is it going to work out for you? It's much better to get the home now rather than to wait a year or two where nobody has no idea of anything that's going to happen.
Yeah, what's coming up in conversations when we're talking with listing agents, buyers, like, a 2-1 buy down is a hot topic right now.
Yep.
I don't know if you were going to hit on that at all or not.
I just made a video for it about 5 minutes ago and actually have it in the presentation too for us to go over it. I mean, I probably had 5 real estate agents in the past couple of days text or call me. Hey, what's the 2-1 buy down? How does this work? How can I use this when I'm trying to list? How can I use this when I'm trying to help out a buyer? It's a hot topic.
Adjustable rate mortgages, that's coming up more. We started closing I closed my first 2 adjustable rate mortgages in the this month, and I haven't closed any probably in the last 15 years. So that's a nice alternative.
They are
with lower rates than what the fixed rates are usually.
And some buyers get really weary when they start hearing anything besides fixed rate. These are not bad products as long as a buyer understands that, hey, I might want to look towards every 1 year or 2 years, maybe towards refinancing or doing something of that nature. Then it can still be a great product for somebody. If you're somebody that wants to just get a mortgage and not think about it for the next 30 years, it may not be the product for you. But if you're someone who's, like myself, every single year in January, I look at mortgage numbers. I look at where my home is at. I look at, should I sell my home? Should I keep my home? Should I do a refinance? Every single year I'm doing a financial planning for my entire family. And so when I do that, I'm the type of guy that, one of these products could potentially benefit me because I'm already going to be up to speed on what's happening. But
sure,
different products are better for different people. And those ARM products, being able to get, I think your ARMs were in the 4%.
Yeah,
that closed.
Yeah, and it was they're on 5-year ARMs. They're fixed for 5 years, and then it can adjust up or down after that.
Yep.
But like if it's if for primary residences, second homes, there's no prepayment penalties on them. So if rates come down a year from now, you can refinance. Rates come down 2 years from now, you can refinance. If rates don't come down for the next 5 years, your rate's fixed for 5 years, and after that, it can adjust up or down. But that gives you a long period of time for rates to come down.
Yes, you got it. I love it. Well, that was just a teaser for it. Let's go get into it. So news headline for rates. We're going to get into rates first. We're going to see what the news is saying about rates, and we're going to see what's actually happening with rates overall. So this is the news. This is actually as of this morning. Sharp drop in mortgage rates does little to boost demand. Some home buyers lose deposits of $10,000, $20,000 or more due to higher mortgage rates. Today's mortgage rates, refinance rates, November 17th, rates down again as mortgage, blah, blah, blah. So as you know, the news, they know how to turn any subject that should be a good subject. Rates are down, so they should be more affordable for buyers.
2 of the 3 are negative.
2 of the 3 are negative. We don't even fully know about the third one because it has a ... next to it. So overall, this is what the news is saying about rates. From the past, historically, as we can see, we are not doing too bad when it comes to rates. People who have bought homes in the last 20 years, 30 years, the generations before, they're looking at our rates right now and they're saying, hey, that's not a bad rate to be at right now. But we were kind of teased over the past couple of years having those extremely low rates, but we're not at a moment right now to where rates are really that bad historically. And over the past 12 months, this is our only lens that the news is going to be talking about.
Yeah.
The rates have gone up. And if you're only showing this, you're going to be saying, oh my gosh, rates have gone up double in the past 6 months. But they actually have gone down as of today, or in the past week. This only goes to November 10th.
I was looking at my calendar. I think it's like the 17th. Okay.
Exactly. That's why I made sure I put that on there. That says on November 10th, and the rates actually dropped last week because of inflation going down.
Inflation numbers came out on Wednesday. It was either Wednesday.
It was Wednesday or Thursday.
Wednesday or Thursday.
Yeah.
And that's when they actually, I think it was Thursday because the markets were closed on Friday for veterans.
Yep.
Okay.
So this line is actually ticked down a little bit. So we've actually had a little tick down and it's looking a little bit better for us right now. Where's your feelings on rate right now?
Well, I have a client that's closing right now on a cash out refinance at a 7.625% rate, and we're paying all of his closing costs. I have another client that locked in 45 days ago, and he was paying a discount charge at a 6.75 rate. The guy at 7.65, he had an option to do the 6.752 with some discount charge. He's like, shoot, he goes, I think rates are going to come down in the next year. I'm going to do this refinance. He had to do the cash out refinance because he paid cash for the house and he borrowed some money from somebody. So he had to pull the cash back out to pay that person off. So he's like, listen, he goes, I'll take my chances. He goes, no closing costs. Rates are going to come down in the next year. We'll refinance to a lower rate then. And then, I'll just pay the normal closing costs then.
Yep.
You have some people that are, paying discount points to get a rate down in the high 6s. I priced one out on a couple days ago, and I was able to pay like a little over 2 discount points and get a rate in the high 5s. But every situation, John, is different. Different loan amounts, different credit scores, different loan to values. All those things factor into what your interest rates are going to be.
Yeah. I would say that the biggest hurdle is buyers just not talking to us. When buyers only look at the news and they talk to grandma and then they talk to auntie and they try and figure out what's the best thing to do just by people who aren't experts. That's like, you having a very bad knee problem and you're only going to, your mom, your cousin, auntie about what you should do about your knee rather than going to the doctor. Mortgage lenders, we're kind of like the doctors in this space. Do we have PhDs in economics? No, but are we, doing 5, 10, 15 pre-approvals a week, looking at credit 5, 10, 15 times a week, doing monthly payments and cash to close and going through different scenarios for buyers every single week? Yes, we are doing these every single week for years and years and years. So when it comes down to it, we can be able to give you a good perspective on looking at your specific information, your purchase price you're trying to buy around, how to be able to make a loan work out for you. If this is the right time, is it not the right time? We can help you game plan for that.
Yeah, well, we're not ticket takers, here, we're true like mortgage professionals.
Yeah.
When rates were really, really low, anybody could do a mortgage for you, and you end up with a pretty good situation. When investment market was doing good last year, any financial advisor could have done well for you.
100%.
When houses were selling in a day last year, any realtor could have probably sold your house. Now you need a good financial advisor. You need a good mortgage professional. You need a good realtor.
You do.
It's more important now than maybe ever.
You got it. Gabriela, any comments on rates?
Yeah, I mean, when we look at it, I love that we do the historical 40-year, and then you definitely narrow it down to the last 12 months, because that's what people retain kind of the most, like what's happened in the last year. Interesting conversation that happened over this weekend is somebody was, definitely reading me a headline saying, yeah, it's the highest that it's been in the last 20 months. And I said, well, sir, put in perspective what happened 20 months ago. Where were we? We were just coming through a pandemic. People were losing work because they couldn't work. I mean, I said there were different factors at that time, and that's why the interest rates were a little bit lower, so it made it more affordable. So now things are changed, and yes, the interest rates are higher. I said, but you're comparing the current rates right now to the last 2 years, when we just covered every single point as to a new realtor was more than likely going to get at least one sale. A new loan originator was more than likely going to be able to at least have a few sales under their belt.
Yeah.
And now we're talking about the seasoned veterans that either are sticking it out or have been through this before. And it was a very nice casual conversation. And I think he kind of just took a step back because he didn't realize, I'm like, you're talking to somebody who hears this every single day, sir.
Sure.
So, if I wasn't in this industry, I wouldn't have this information and this knowledge. So yes, we need to stop talking to our aunts, uncles, and everybody, or the person who just bought a house, because they're not experts in what you guys do.
Sure. Yeah, I was talking to my friend's daughter, who's going to be a first-time home buyer and looking to purchase a home, and she had said, like, I'm looking to get a different job. I said, what's your income now? She said about $45,000 a year. And I'm like, it's going to be very difficult for you to qualify for a house in this market in our area, like in the Tampa Bay area, with making $45,000 a year, with where rates are at now. I mean, realistically, a single person, a family probably needs to make close to $100,000 a year. Maybe not exactly.
To live in the city.
To live close
in a stick-built home in the city.
Exactly.
This is also why I've been aggressively over the past couple of weeks, been looking at mobile homes, manufactured homes, factory homes. I've actually been on the ground because unfortunately, I don't know too many real estate agents that are experts in this market, that know this market. So I'm taking it upon myself to become the expert in this market. That way I can have some sort of option for these buyers.
Yeah.
If it's not fully in the city, if it's around the outskirts or somebody's own land, there's so many different ways you can be able to go about this product for half the price of a stick-built home.
And maybe a third of the price or a fourth of the price, just depending on the situation. I remember my grandparents moved from Pennsylvania down to Lake Wales, Florida, and they bought a mobile home down there, and it was a nice mobile home. It was a nice community.
Yeah.
I mean, there's nothing wrong with them whatsoever, and that is the situation. So, like, if you have you're a teacher that's making $60,000 a year, or a single police officer or fire, mobile home is the way to go.
Yeah, and people have the stigma about the depreciation. Oh, your home is gonna go down in value, but people don't understand that a stick-built home goes down in value if you don't maintain it. So if you're in a mobile home that's not in a good neighborhood, and that mobile home is not well maintained, it's going to go down in value. The same way if you have a stick-built home, if it's not in a good neighborhood and you don't maintain it, that can go down in value.
Typically, yes.
But overall, though, majority of the time, they're going to go up in value. But I went to a mobile home park the other day, and pending was $195,000 for a 2-2 mobile home.
There you go.
1,400 square feet. But once again, it was in a nice neighborhood, a nice park, and it was still a mobile home. Like, it wasn't even modular. Like, there's modular homes that look like stick-built homes, and there's mobile homes that look like mobile homes. This was still a mobile home and a park, but if it's in this nice park with the nice community pool and it has, all the different amenities and shuffleboards and et cetera. Those are still able to maintain value over time. So but overall, they can be at a much better price point than a lot of single homes. Good. Here's some data. We'll hit on these very quickly. That way we can get into some of the real estate data. MBS Highway and National Association of Realtors, they come out with data on a daily basis. But this is from last week. It's very important, so that's what I'm just mentioning it. I'll give you the quick update. Inflation numbers have gone down. Inflation is calculated on a they give you a yearly basis, but it's really a month-to-month basis. And they total up those month-to-months over the past 12 months to give you that yearly amount. And then there's different inflationary reports. So one of the inflationary reports went from 8.2% to 7.7%. And the other inflationary report went from 6.6 to 6.3%, which in inflation data, this was just very good to see after seeing, the past however many months, this number going up, and the mortgage market really liked seeing this. And it helped us out with rates. What are your feelings on this?
Yeah, well, I mean, the Feds, nobody looks at it favorably when they're continually raising rates, and these are the Fed funds rate, which then affects your prime interest rate, which affects your home equity lines of credit, which affects your credit cards. So they're doing this to curb people's spending, and then by curbing the spending, the supply chains start to open up more. There's more supply in general if people aren't buying as much. Used car values were skyrocketing, just like like house values. So those have started to slow down and curtail as well too. So that's good. I mean, and people should think twice, maybe about going out to eat 2 or 3 times a week. Maybe you got to eat once a week, or maybe you got to eat once every 2 weeks, or maybe you got to eat once a month. And it makes me think, definitely.
Yeah, good stuff. Gabriela, anything like to add to this one?
I also kind of want to maybe add that, we did go through a time period where people were not spending money because they weren't really going out as well. So there was, you pulled it up in on the podcast before, is that during that, at least for like 2 years, people were saving more money.
That's a great point. And
because people were saving money because they were remote workers. Yes, I know stimulus went out as well. The costs that people normally would have, gone out, travel was affected. All of these things that people normally would have done, kind of came to like this halt, slow, or stop. And then all of a sudden things started kind of, some restrictions were, brought down, and then people slowly started going back out to eat, slowly started traveling. That so much so that all the travel industry was affected because they didn't have enough workers. So now there's a labor shortage because, well, we didn't need you because there wasn't a demand. And now we need you and there is a high demand. And so, consumer spending is now starting to increase. And they're starting to look at what it's going to look like for, for the holidays, Christmas spending and holidays, you name it, people are going to. The concern was from the article that I read is that people are going to start looking to get increasing credit lines to start spending for the holidays.
I don't know if that's the best move.
Well, and I'm not agreeing that it's a best move either. It's just when we talk about buyers, we also have to think about like the consumer mentality of spending when you couldn't spend, and then when you weren't able to spend, and then the haves and the haves nots. I had money, but I couldn't spend it. Okay, now I have money, I'm going to spend it. And now people are like, oh my gosh, I don't have money, but now I want to keep spending. So this is where we go into the inflation, where the economists talk about those numbers. But I like to discuss about like the mentality of the people, where they have been for the last at least 2 going on 3 years.
We might have to get you on the news.
No.
Robots, and she's the heart. So.
Well, and that's kind of like something that we've kind of established, is that I put a different perspective, because I don't come from the loan originator side. I come from the, from marketing, and also like, consumer, like, let me put myself in the consumer shoes when we're talking about these topics. And then, yes, even that's national data, but also what about, we're in Florida. So what is the Florida inflation? It was trending higher than in the national data. So that's something that again, not working in this industry, I wouldn't have known that. And I wouldn't have understood that.
Yeah.
So.
Yeah, I agree.
Well
that's definitely a message I'm going to be pushing over the next couple months, which is find a way not to put, $3,000-$4,000 on credit cards.
Please don't.
For your kids having a Merry Christmas and everything else. There's plenty of ways. There are so many events that happen during this time of the year, especially free events. So many churches that are doing events. Many different get-togethers, people having potlucks. There's a lot of things you can do to be able to take care of yourself and your family and have a fun time. Rather than it just be about December 25th or whatever the holiday you may have during that time, and giving a kid an actual gift.
I think about how many toys my kids have, like my two daughters, like
all the toys,
tons of toys, like so many toys that we give like part of their toys away throughout the course of the year. When we have Christmas gifts that we save from one year to the next, because
I've done that.
Because the grandparents
just re-gift them.
The grandparents buy them so many gifts, and like, well, that's not, well, then we don't have to buy them as many.
Of course.
I certainly did that with my niece. I had a whole storage box of toys that my daughter had growing up, and then when my niece was old enough to start playing with them, I said, "Here, sis, here's the toys for my niece."
Yeah. I'm a huge fan of the one decent gift. There's just a bunch of little stuff. Just a bunch of little things. I do the same thing for my wife. So Valentine's Day, Christmas, etc. I give her that one thing that she has on one of her lists that she's going to enjoy, and then give her a couple little small things,
Christmas pictures, hey,
exactly,
capturing memories, making memories. But
the photos are definitely going to last a lot longer than that toy your kid's going to break 2 weeks later before you even.
And there'll be a story behind that picture.
Yeah, so we we only asked Santa to bring one gift for our daughters in our house. That actually wasn't the way it was when I was growing up. Santa brought me more than one.
Santa was bringing all the gifts.
Oh no, we had a community gift. Santa was bringing a community gift for the four of us. Yeah, that was our.
Santa's bringing dinner. Santa's bringing dinner that night, so you can enjoy this food from Santa.
He was being humble with us, so we appreciate it. We grew up that way.
Yeah, my daughter asked me about Santa Claus. I think it was last night. I was like,
I'm
not even getting into it. I'm not even getting into it when I mentioned.
Watch this. We don't want to.
Yep, you got it. There you go. Thank you for assisting.
You're a reminder. Yes.
So a little bit more data. Mortgage applications were down a little bit. I'll skip over that because and retail sales rose 1.3% October, which was stronger than the estimates of 1%. So retail sales is increasing a little bit.
Which makes sense if we were going into the holiday seasons.
You got it. I like this graph. This only goes towards Q1 of 2022. We'll see how it goes over the next periods of time, but I like seeing where credit is going. Like you mentioned, like we're going to see this next holiday season, Q4 of 2022. What happens there? This is a percentage of household debt that is being used on credit and on debt services. So as you can see, the stimulus checks, I think the stimulus check was in gray. People actually saved and they paid off some things when they got the checks. They didn't just go out and spend that towards things. They actually did some things more considerable. But unfortunately, as you can see, it started moving up a little bit, and we'll see how it goes this Christmas time. Hopefully it may move up again. But the overall goal is for people to keep their debts low so they can be able to, the lower your debts are, like we do this all the time in our business, where a buyer is looking at monthly payment. This is happening a lot right now with higher interest rates. They're looking at, let's say their goal is $2,000 a month, but the monthly payment for the property is going to be $2,500 a month. And they're saying, oh, what am I going to do? Well, a lot of the things I'm telling buyers right now is, hey, you may not be able to affect that mortgage payment that much, or it's going to take so much money to affect it. I don't recommend that. But if we pay off this car, that's $5,000 left on this car, but it's $500 a month for you. Pay off this credit card, pay off that. Now we're taking your overall household monthly payment from X amount, and we're going to save you $1,000 a month on your household payments, so where you're actually going into this mortgage, this new home, it's going to be higher than the monthly payment you wanted on your new mortgage, but your overall household monthly payments are a lot lower than what you want it to be.
Yeah, and even with interest rates, if you're on 30-year fixed at between 6% and 7%, that's much lower than your credit card interest rate is going to be.
Exactly.
Yeah. So
exactly, they are increasing. Gabriela, anything you'd like to add to the credit?
I think I kind of said it a little bit earlier, and then you guys have filled in, with the expertise size of what you're seeing when you speak to clients, about, what debts they have. We're going to see more of that again. People need to get re-educated about credit, financial literacy, how it impacts them. It's one of those reminders that just will never go out of style. You're just gonna have to, and then the new generation, they're gonna get educated as well.
Well, one of the best classes that I've taken in my life was Dave Ramsey's Financial Peace University. Took that about 15 years ago, and it's like the Finance 101 of Finance 101 courses that they probably should teach in high school and college. And his main thing is about getting out of debt snowball. And so I'm talking with clients that have multiple credit cards. So instead of paying, larger balances on the highest one, pay the smallest ones off first, then the next smallest one, and the next smallest one, then the next, and work your way up so you can kind of get momentum, and you're setting yourself up for success then with getting into your house, because you're rolling into your house with $15,000 of credit card debt, and your monthly payments going up higher than what you were paying in rent. You're not setting yourself up for success, in my opinion.
100%. That's where you see there's not a lot of foreclosures happening right now in the market. There's hardly no foreclosures, hardly no short sales. The market is very stable when it comes to that. But you will see those types of things if a buyer goes into a home and, like you said, their monthly payment goes up and they just increase their credit cards because of holiday times, et cetera, et cetera. And add on to that, the most important book I've ever read on this topic, which I have my dad reading, which I'm proud of him for doing this, is a book called Profit First, which the whole concept of the book is it's kind of like Dave Ramsey, but for the newer age. Instead of putting money in envelopes, you have a separate bank account, and you have 5% of your pay go towards vacation. You have 5% maybe go towards profit, which is like funds type stuff. You may, in this type of situation, you have, let's say, 3% going towards potential gifts for the family. You just have these certain things set up that you're going to make payments for. And instead of getting to that point and having to be able to do some big lump sum, we're trying to figure out how to make a payment for it, or for potential like car issues or home issues, whatever you want to set it up for, those 2 or 3 accounts, you set those things up. And then now you don't think about it. You only see the same payments that you always see coming into your actual account. And then once those accounts get big enough, you may only check this account once a month or once every few months. And once you see $3,000, $5,000, $10,000 in this account, it makes you feel proud of yourself to be able to do this, and it takes one day to set up. And once it's set up, it's a continuous situation to where you're saving without even thinking about it.
That is a lot easier than dealing with the cash. Because the envelopes.
The envelopes. It works though. No one's ever gone broke off of using the envelopes method.
My wife keeps the cash in our house. She handles all that. So I say, hey, I need some cash. Going to the Buccaneers game and I need some cash for tipping or parking or whatever. So and so like with us, I for the most part use my credit card to pay for things. So I got my bank account, my paycheck comes in, I have my credit card, which I use to pay things, and I pay it off every month. And I have my tithe for church, send that electronically. I'm not writing a check out and dropping it into church envelope anymore. So so many things are electronic. So yes, that I haven't read that book, but that may be easier for the type of society we're in.
I mean, the side of church you go to, it will take forever to pass that. The amount of people you would have to be walking up and down to pass around and collect. It'll be a good amount. All right, good. So get into some of my favorite stuff to go over. This is some of the most misunderstood data that is out there in the market. And this is the real estate data. NAR comes out with this data every single month. NAR is from the National Association of Realtors. And this puts perspective on what's happening in the market, because this real estate game is seasonal and it is regional. And it's not only regional, it's almost on a local level as well. One neighborhood versus another neighborhood 5 minutes away could have different ways the market works. But overall, as you can see, during the summertime, certain things happen, and during the wintertime, different things happen. So, for example, active listings. During the spring to summertime, there becomes more active listings. And then once it gets towards the wintertime, active listings go down. So as we can see, these are the lines. All the lines at the top were the years before COVID. The years that are close, the light blue and green are going to be 2020 and 2021. And the golden line is 2022 for all of these graphs. So as you can see, there was this giant uptick that did happen between April and August, but it's doing the same thing that it normally does around this time of year, where it's starting to level off, and then we'll see if it starts dipping a little bit come the next couple of months.
Well, we love to see, more listings.
We do love this. We need more listings. Like even during 2017, 2018, 2019, that was still not as much listings as we would like to have had. We still would have liked to have had a little bit more listings for the buyers. So this shortage was an extreme shortage, and where we're at right now is nowhere near where we want to be at.
I mean, now we are able to get, buyers contracts approved with FHA financing, with VA financing. We're able to get, contracts accepted where they're not going in 50,000 over the list price. In some cases, they're going in under the list price.
Exactly.
And that wasn't the case last year, or the first part of this year. Like, it's normalizing a little bit, which that's refreshing in ways, because it was frustrating, like, in the beginning of this year when you couldn't get buyers contracts approved when they were an FHA buyer with FHA financing.
Yeah.
So, and now I'm not saying it happens every single time, but it's plenty of FHA buyers are getting their offers accepted. Plenty of VA buyers.
Of course.
We're able to get seller credits towards buyers' closing cost. Again, not on every transaction. However, it's happening.
Just getting more normalized. So I like to put this graph next to the days on market, because in the news is going to shout out the active listings. And they're not going to tell you active listings compared to last year, 2 years ago, 3 years ago. They're just going to say, oh, listings are up 20%, 30%, 100% in the past couple months. Housing market's going to crash. That's all you're going to see on the news headline. But the actual, one of the most important data points we can actually mention when it comes to housing is days on market, which is going to be, if there's no more new homes that comes on the market, how long would it take for all of those homes to be sold? And to be honest with you, anything less than 5 or 6 months is considered a seller's market. It's considered a market where sellers have control. There's probably, multiple buyers buying for these properties. And even since 2017, 2018, this number has been astronomically low, to the point to where the last 2 years it's been the lowest levels almost of all time. And we got to a point to where your average listing, your average days on market was down about 30 days. And we're looking at 15 people putting in offers on properties, 20 people putting offers on properties. And so right now, days on market has gone up, which you'll see that headline, oh, days on market has increased, but it always increases during this time of the year.
What's that say? It's 51?
Yeah, 51 days as of October 2022. So it always increases around this time of the year, but it's even leveling off. It's not like, going up straight like this. It's leveling off compared to some of these other years where it kept going up. So what are your feelings on both of these together, Shawn?
Well, listen, again, I feel like it's refreshing to have some more houses on the market. Buyers have, some choices, where, buyers were previously buying properties without even seeing the property. At all. And then doing their home inspection, if they're from out of state, flying down here during the home inspection and seeing the house and finding out that they don't really like the way it looks. Well, now, I do have clients that are telling their agent, hey, listen, I'll just go look at the house on Saturday. Now, this was on Tuesday. She goes, the house may not be there on Saturday. Well, sure enough, they go to look at he said, I want to do it on Saturday. House wasn't available on Saturday. So there are those situations. However, the conversations that I'm having with listing agents, that the houses are sitting on the market longer before they're getting offers. And then, you have your sellers then that are potentially questioning, is my agent doing the right thing? Well, this is normal, for your house to be on the market, for, 51 days. That's normal. Like it used to be, when I first got into business back in 03, 04, I would think they were on for months and months. And I would think it was more so 5 to 6 months. I don't know it off the top of my head, but I'd venture to say it was more so that 5 to 6 month mark. So, again, it's nice that it's normalizing some, and, I'm excited. And buyers have opportunities now that they didn't have 6 months ago, even though rates are higher, get over it. You marry the house, you date the rate.
You are correct. I say it all the time on here. I also mentioned one more other thing. The only house that was the type of house that was selling in almost any market is a new house or a newer house that is priced appropriately to where anyone can go to that property. And if it's priced appropriately and they don't have to do anything to the home and almost everything in the property is new, that's the type of home that's going to sell. Buyer's market, seller's market is going to decently sell. But any home that has been, 15 years, 30 years, 40 years, 60 years, 70 years, where a buyer walks through it and they like some things and they dislike other things, and this thing over here is 20 years old, the roof may only have 5 years left. If the buyer can be able to nitpick anything, then that's going to make it to where, this days on market continues to increase. You're going to see homes sitting on the market a little bit longer because buyers are not going to be wanting to negotiate in certain types of markets.
Yeah, I mean, you could have got away with that, 6 months ago.
You could
year and 6 months ago.
Yeah.
However, very good points.
Yep. Gabriela, anything you'd like to add to these two?
Yeah, sellers are definitely having to reconsider their options on how they're listing their homes at this time. Before, we'll compare and contrast, before they felt that they could say, no, I want my house to list at this price. And, realtors had to rattle with that decision. I was like, okay, I want to meet the seller because I want to have this listing. So yeah, they'll go above listing what would have been a normal listing price, waiving appraisals, the appraisal contingency, want to make sure I say that correctly. And so, but the mentality has been that sellers still have a lot of control in the market because it still favors them the most. Now we are entering seasonally and where things do tend to go a little bit, everything, all the charts are trending in the correct direction for the season. And what we say, and realtors also reiterate, is like, this is now when a seller who's a real committed seller in this market, in this time, is going to keep their house listed during the holidays. And if a buyer is committed to buying, this is a time when they're going to actually find homes that are ready to sell, because they're starting, some realtors in chatter, when you do have conversations with them, they're starting to say, hey, my sellers are starting to pull the listings. They're, they don't want to list the home right now. They want to wait until the beginning of the year. And they've done all this work, and the realtors are not going to get paid until that house is sold. Now, also, sellers are starting to kind of grapple with that reality that they no longer have that luxury of overpricing their homes.
Yeah.
Because now buyers do have a little bit more negotiation, a little bit more wiggle room to negotiate. And if the appraisal doesn't meet that actual value, then now the buyer can come back and say, hey, that's where the realtor does all their negotiating. We're not part of that process.
You bring up a good point too. Like, so the buyers are a little squirrelier now too.
Well, they really do, because now they have, when they didn't have options before, they felt like, I have to make this decision and I'll just live with it and deal with it and then move on and sell it. Perfect example is somebody who bought a home, last year's market and now realizes, what? I don't like living in Florida. I like the cold. I want to go back home. Okay, guess what? Now they're going to list their home. They built some home appreciation, some equity, and they can sell their home now and move on. Now that's a new home that's been added into the inventory. But as far as like, when we keep looking at this, we are looking at a new normal. It is what they call the shift. But we are still going to start seeing some similarities to what we've done, what we've seen before the, COVID pandemic years. It really is more about the mentality of like buyers and sellers, and how realtors are actually communicating with their buyers and sellers about like, hey, stick with me. I'm a seasoned agent. I know how to get through this. Or, hey, talk to the lender, stay, let them discuss your options. Even if something changes in the financing part of it, to have that ongoing conversation, because they may be more favorable. You may start a loan today as an FHA and the credit improves or whatever needs to happen. And then you can switch it to a conventional where the interest rate is much better. So, buyers also really need to have a little more confidence in who they're working with, but vet the people that they're working with.
Yeah.
Because the realtor that came into the market when it was hot isn't going to be the same realtor that has seasoned and weathered in the past.
Yeah, and you brought up a good point about buyers being more cautious. So I was saying they're a little, I used the word squirrely. But so like, so with interest rates being higher, they're not as apt to, overlook certain things with the homes, where when they were getting a 2.875 30-year fixed rate, like they were more like, hey, the payments all, we got a great payment, awesome. I can overlook that it's got an older roof, that it's got an old AC, that the, kitchen cabinets, countertops aren't as, nice as I want them to be.
Appreciation is going to go up, so I'll make some money eventually, equity, there's a lot of.
So, I mean, I think we're seeing about 20% of the contracts that are written end up canceling, probably close to that. So, sellers being more flexible is going to be important. Or if I'm selling a house, like my last house that I sold, I had to replace the roof and replace the AC. That wasn't my plan, by the way. However, it came up in the inspection, and I wanted to sell the house, so I worked with the buyer. Not every seller is like that. However, in the market that we're in, the market we're going into, it's going to be important for the sellers to be flexible, and it's a team effort from the buy side, from the listings, from the seller side, from the listing agent, buyer's agent. I say it's a team effort. Let's figure out a way to make it work that it's a win-win for everybody.
Yep.
There's definitely going to be a lot more communication. And the only other point that I'm going to add, because you mentioned about replacing the roof, is something that sellers are going to have to also realize is that, with the changes to the homeowner's insurance, and also the life of the roof in the state of Florida, even though you may have been able to purchase a home with a 3-year life left on the roof, once you pass that 1 year, you have to replace the roof. That is something that
it's getting more stricter.
There's a lot of restrictions now. The homeowners insurance market has definitely changed, at least in the last 18 months. We've seen carriers pull out. That has affected a lot, which again now also affects the payment of the home. So and we don't talk a lot about that, but that is also a determining factor for people when they look at oh, well, my mortgage payment is this. Yes, but your homeowner's insurance, it's this number. I'm personally dealing right now where my homeowner's insurance is actually more than my mortgage payment. It's a little crazy. So there's some stuff going on right there, and I'm like, that's, how did that happen? Isn't that supposed to be the other way around? But that's another story for another time.
Okay,
there you go.
Yeah,
insurance.
I'd be interested to hear more of that.
Oh yeah, one day.
Gotta love insurance. All right, another stat: median list price versus price reduced share. So as you can see, median list price is going to show you, in the middle, if you have 100, it's going to be the 100 different sales prices. It's going to be the one that's going to be in the middle. So,
and that's for the United States of America.
This is still U.S. because once again, this is going to change from region to region, from location to location. But nationally, as you can see, we are way above where we've been at the past couple years, 3 years, 4 years, 5 years. People are getting a lot of value for their homes. And it normally goes up once again during the summertime, and it dips slightly from November to December. It did have a pretty, substantial dip, at least compared to these last couple of years,
which I'm
around June, July.
I'm fine with.
Which is not a bad thing.
Yeah.
But if you're still looking at this versus, the year before, it's probably, if you sold your home 2 months ago, you may have gotten roughly $15K more for that home. But you're still, if you were to sell your home around right now versus last year, you're still getting $40K more than you would have gotten last year for that home. And as you can see, that line didn't dip down like this. That line dipped, and it looks as if it's maybe leveling off for the rest of the year. So overall, though, prices have gone down for homes. And if they look at the news and the news goes, oh, prices have dropped 5-10% since XYZ, they're not going to tell you that versus last year, it's 40K up versus the year before. If you bought a home 4 or 5 years ago, you probably made 200K, 150 to 200K when it comes to equity in your property. So that's a pretty good thing. And then next to that is going to be your price reduced share, which is going to be homes being reduced in price. So if that home was on the market initially at 400K, and then it dropped down a couple weeks later to 390K, 370K, etc.
Yes.
Now this one showed first off, that's 6% number. These numbers down here were astronomically low. It looks as if it jumped up, and it's kind of doing some weird things. So we're kind of watching what these price reductions are going to do. We'll see if this number continues to go higher and higher. That could be a trend towards something else happening in the market. But overall, though, homes are still selling well above where they were last year, 2 years ago, 3 years ago, etc. What are you getting from this, Shawn?
Okay, so I'm not as familiar with this price reduced share. So on this graph, so is this like yellow line?
The yellow line is us.
Okay, so
right now, 2022.
So as it's going up, throughout the year, so that's 20.9%. Does that mean that 20% of the listings that are on the market are reducing their list prices? Is that what that means?
Correct.
Okay.
Nationally, which is normal in the normal years. And it did still have an increase, but we'll see what's going to happen over the next couple months, in my opinion. If it starts going down like it does in normal years around this time of year, then it just means that we're probably back to a normal price reduction share. If not, if it continues to go up, it could mean something different. But
yeah,
I'm not an economist, so
yeah, I'm again, and I'm fine with reducing the prices. The buyers certainly like to see that. And I was through the downturn in the market back in 07, 08. Like I got in the business in 03, and the market absolutely tanked. Totally different situation than back then. You had buyers that were doing 0 down loans, one day out of bankruptcy, one day out of foreclosure, stated income loans, not getting like income documents. Now like you have fully documented loans, you have realistic appraisals, you got qualified clients. So seeing a significant there's no way I see the market tanking. Seeing values adjusting, like I saw on the news.
They're supposed to adjust.
They could see a decline of values of 20%. Well, I mean, that's like national averages. That doesn't mean in South Tampa, zip code 33629, that you're going to see that, or St. Petersburg 33704, or Tampa 33626 in West Chase.
Yeah, which I'll actually show some regional data right after this one. Anything else you'd like to add to this one, by the way?
Yeah, the resounding is like there's a rational cooling off period is the term that I've been hearing lately from some, a couple of realtors at least, saying that we're finally starting to see things become rational, where we're not seeing, we've covered all of these things, like, people putting offers high over, with the list price and, sight on scene, all the stories that are going to come out of the housing market from the past couple years are just still wild. Like wild is probably the best way to describe it. And so realtors are now starting to say like, no, things are starting to get a little more rational, where now this is where my expertise is now being finally leveraged and being used. So, days on the market, for the realtor that got into the market, 18 months ago, 2 years ago, this is freaking them out. They're like, oh my God, prices are going down, or they're reducing prices. No, if that's why you get educated. That's why you attend, seminars, you attend whatever real estate training is out there for you, so that you can get educated on the market, so that you don't become sensationalized with what the news is saying, so that you can have an educated conversation with your buyers and sellers. So that's really kind of what's starting to happen when I hear some realtors give me two perspectives, like prices are going down. It's like, no, it's rational. It's normal. This is the season when things do take a little bit of a, downturn. You just need to start looking at it from a consumer perspective and also a trend perspective. And then you have the realtors that are just like, been here, been there, done that. We're going to get through this just fine. So it goes back to, again, who you work with matters.
There you go. And I'll mention one more time, springtime is normally when homes start going up in value. So no matter what happens next couple of months, most likely it's going to still do that. This coming spring, people get tax returns. People aren't having holidays. There's not too many holidays you're really paying for between January, February, March, April. So normally people have more money, disposable income, to be able to pay for those things. And price reductions, a bad market, will probably look like 50% price reductions, 60%, 70% price reductions, 20% of homes, prices being adjusted. That's just looking more like a normal market right now. Good. This is more regional data. So that was national data. This is regional data. So active listing count year over year. The Midwest is going up, and the Northeast is actually going down. And where you see the majority of activity happening is in the South, which is us down here in Florida, and in the West, which is over to California, everything over there. So there's a big difference between if you're looking at real estate in the Northeast versus looking at real estate where we're at in Florida or over in California. And even in the Midwest, if you're someone over in Indiana, Kansas, etc., whatever's happening there, you're seeing some more listings, but not something astronomical. While if you're down here in Florida and in Tampa Bay, I'll have it later, it's 100% increase in inventory right now versus where it was last year. Median list price year over year is still an increase. The West is 5%, the South 10%, Midwest 12%, Northeast 8%. So it's still increasing in list price versus year over year. Days on market is not astronomical. Once again, we are still less than 2 months for the entire nation. And so even if it goes up 2 days, 3 days, 4 days, that's not going to get us to the 6 months, 7 months, 8 months that we need to be at, that will be considered a buyer's market, where savvy buyers can come in and started really haggling for 50K less, 60K less, foreclosed properties, short sales, things of that nature. So overall, the market, in my opinion, from looking at this, still looks decent, but it's also going to depend on where you're at in the nation. What do you get from this?
Yeah, I'll be interested to see what it's at after November. So do you recall, so the average day, so the median days on the market, 6 days here in the South. I'm curious, do you remember what it was last month in September? Was it 3 days on the
It's only been going up like 5 or 6 days.
Okay, so it's going up a little bit.
I have not seen anything more than 5 or 6 days. I've been looking at these numbers for the past 7, 8 months.
Okay, so I'd just be interested to see, like next month, after they give or after November's over,
if it goes up 10 days.
I'm guesstimating that, that may be like 11, 10, 11, 12 days. Guesstimating.
That's why this is timestamp. This is November 2022 when we're having this conversation. December is going to be different. January is going to be a different story. You got it. Gabriela, anything else you'd like to add to this one?
No, it's just nice to look back and see where we were in October, especially with where the interest rates were, and they were steadily climbing in October. And the effect that it has in the mortgage industry is a little bit different, but the mentality that people receive when they hear that the Feds are increasing the rates. But as far as we're the South, man, why we're always just setting these
even look at price reduce.
No,
look at the price reduce in there. So nationally, it's showing this big giant number, but in the West is really what's carrying. The price reductions, and then the South is next. But if you're in the Northeast, homes aren't really being reduced in price. People are putting it on the market, and it's staying very close to.
I think probably the houses out west went up the absolute most, I would guesstimate.
They always.
And the South was was right behind that.
I saw an infographic. It was actually like a video that showed price of land over the last 50 years in different states. And California was never even really on the map, and then something happened, and whereas towards the late 80s, 90s, and their price of land and real estate is just always the astronomical leader when it comes to everything happening in the market. So right now it's the same thing. They were very hot again, but it's definitely cooling off in the South. Here's some Florida data. So we just looked at national and then regional, and guess what? It changes even from different places in Florida. So median list price, of course, Miami is dominating around 600K. All the other counties around 400 to 445K. Median list price, you have seen increases. Miami's up 25%. All the other counties around 12%. Then you also have active listing count. Tampa, Florida, 118% versus last year. 89% in Jacksonville, while Miami's only around 22%. So we're really leading the cause when it comes to more homes on the market. But once again, that's the news headline you'll see is, we have doubled inventory. But when you look at the actual days on market, 51, 54, 57, Miami 61, it is nothing that's, it's still, I remember when we got the 2 months, like a couple of years ago, when we dropped from like 4 months inventory to 2 months, every single real estate agent, every single lender was like, yo, 2 months inventory, this is crazy. It's so low. Homes are going so fast. But now that we're going up and we're still less than 2 months, everyone's, trying to make a cry towards the other way. But overall, what do you get from this? What are you feeling from this, Shawn?
Well, again, I love to see things normalizing. I mean, it's just, it is encouraging because, watching, the rates continue to go up throughout the year has been a little bit of a
depressing
drag. Now like seeing some improvement over the last week has been nice. Like I brought up before, having clients that are able to get their offers accepted.
That's the most important part.
It's important. I mean, because like, I had a client that was looking. I pre-approved him back in January, couldn't find a house. He now resurfaced. I had pre-approved him back then, and I went into his old file. I had 2.875 rate back in January.
It's different.
He called me. He's like, "Where are rates now?" And this is like a week or so ago. I was like, "Well, they're above 7 now." I was like, "Oh no, I'm sorry." I talked to him I think I talked to him on Monday. I was like, "They were above 7 a week and a half ago. They were in the mid 7s." I was like, "Now you're like mid 6s, so we're getting closer." I was like, "Let's pick things back up. Get me your updated income documents." There are economists out there that are saying, rates are going to come down. there are other economists saying that, we may not have seen the height of them. I'm personally thinking, I'm hoping just like the housing market's normalizing, I hope that the interest rate market is normalizing.
You got it. I'll make one more comment about renting. I feel like renting is for the rich. I had some buddies who were renting and they were doing very well renting, but guess what? They were in finance. They were in New York. They were making $300K a year, and renting to them was absolutely nothing. And they were able to use all that money in the stock market because they have a degree, master's degree, etc. when it comes to finances. But if you are someone who is just renting and you're barely able to make ends meet and savings and things of that nature, the goal, in my opinion, is to try to buy something. If it's not a home, then it's a mobile home. Try to buy something to where you're not renting, because guess what? When you're renting, that's what 100% rent.
You're at the
that's 100% interest that you're paying.
And you're at the mercy of your landlord. So I was at an event last night and I was talking with a lady, and she said she was talking with her client that's looking to buy a house. Her landlord's increasing her rent $600. And this is the house that she was renting previously.
Rent is still going up right now.
And I was like, listen, I can see like a landlord increasing it for a new tenant going in. I can wrap my brain around that going up $600 a month. However, for your existing tenant that's been paying your rent on time every month, jacking it up $600, well, now she's picking things back up to buy something.
Hey, landlord gets a new car. He wants a better pay for the new car. Let me check my rent up a little bit.
There you go. That's funny.
Exactly.
I guess not funny, but
that's what it goes though.
We kind of laugh a little bit about it because it's just uncomfortable to hear that somebody would do that to someone. Especially when they've been a good tenant and it's hopefully they're taking care of the home that they're renting as well. And there really isn't any kind of real regulation when it comes to private landlords as opposed to like rental communities, apartment communities and stuff. That is not the podcast that we have when we talk about that kind of things, but it is something worth noting that the reason why somebody can do that is because there isn't anything that says they can't. So my thoughts regarding as far as the chart, because I remember the last time we saw it, it was like, I'm like, oh my goodness, I was almost close on the average median list and pricing. Is that in the same breath that we will see one headline saying that, oh my gosh, there's very little inventory. This one is saying, it's different. There is inventory. It's not selling as fast. So, we get two different pieces of, information. They're about the same topic, but they're presented in different ways. So, when we look at our market here in Tampa, we're definitely realizing, and actually I was looking at, very closely, John, very closely. I'm gonna have to make that switch, sir. Sorry, we got a little.
It's all good. I'm about to run through the rest of this anyways.
Oh, there we go.
Yeah.
Hey.
Wake up.
Yeah, we're gonna speed this through.
Yeah. So, really kind of to finalize as far as like when we're talking about median days in the market, you're right. We're still in a seller's market, even if a home is on the market for quite some time. It goes back to like where sellers also have to prepare their homes to get the best price possible. Because I assure you that if you prepare your home, you work with a good realtor, and you market the home correctly and price it, is definitely pricing it correctly, your home doesn't have to stay on the market as long. But hang in there. We're gonna get through this little season, holiday season, just like every other holiday season before.
Yep, you got it. There's probably a few more slides, but I'm gonna make sure I'm gonna run through those. I'm gonna have us speak on only two of them, and we'll get out of here. We'll skip that one. I do want to look at this one real quick. We'll chat very quickly about this one. Like I've been mentioning, mobile homes, manufactured properties, etc. This is new manufactured homes versus new site-built homes. If you look down all the way at the bottom, it's going to say new single family. 391,000 is the average sales price. Okay. And that's including land. So if you take out land, that's going to put you around 310K. Okay. While if you go towards the top, new manufactured homes, you have single wides and double wides. Single wides, average sales price for a new single wide 2020 has increased a little bit, but it's still around this 57K. Okay. Double wide 108K. And I don't know if anybody's ever going on a new manufacturer plant to be able to see what they look like. Yes. I took my mother a few weeks ago, who's a real estate agent. She's been in this market. She owns a home, etc. She was in awe of the quality of what they're able to put out. So, if somebody wants a new product, if they have land, either got it from family or themselves, and they want to be able to pump out, roughly $400K to be able to get the new build that's built on site, go ahead. But if it's someone else that, maybe have an old mobile home that is not really usable, that they want to be able to get rid of for cheaply and then put a new mobile home on the property for only $50K, 100K, 150K, there are options to be able to get new products onto these lots. Anything like to say for this?
It's huge. Yes, huge opportunity, huge buying opportunity for people that don't want to spend $400,000 on a house.
Yeah, and there's even custom mobile homes. I went to a custom home builder that they make products that are a custom factory builder building modular homes. They build products that are better than site-built homes because all of their products are in climate controlled facilities. When they're building the actual home, it's underneath a roof the entire time. There's less mistakes. It's under a roof. They can work on it any day of the year, in the snow, in the sun, in the rain. While when you have a home that's being site built, if it rains, all your materials out there are getting rained on. It's not climate controlled, and so those custom factory homes, those can get into the 250K range. Okay. But when it comes down to it, they're building those homes to last 100 years. While your typical site built home, you get around 30, 40, 50 years old and you start really seeing that wear and tear. Sure. If you really pay a custom factory builder to be able to make a product with all the best material, you're still going to save yourself 150K, but you're going to be able to get a product that can last you for 5, 6, 7 generations if you get one of these products. Anything else you'd like to add for this, Gabriela?
Yeah, I've gone toward one of the facilities. I told you we were very close to getting it was going to be a manufactured home. It was going to be, built at the plant. We went and looked at it, went in through the tour. And I mean, I gotta say, there were some of them I was like, oh my God, I could get tile in the bathroom. Like, such a misconception to have. And then when you finally go and actually see it and look at it, it's like, oh, the old thinking of what mobile homes used to be. I really like to call them more manufactured homes and modular, because there is differences between the two. We looked at only manufactured homes because, there was an opportunity for us to have some land that we were going to put a home on there. And then, when we started getting educated on manufactured homes and how they were built, you're right. The plans that we were looking at, it was like they would build the home into 2 sections. And of course, it was going to be brought in a trailer. They would put it together. Now, I also have family members that have manufactured homes. And then, the settling process of like a home, just like a home that's built on site, homes have to settle. There's going to be some movement on, in the terrain. And then once the home is actually finally there's a seal that goes across like the middle of the home when it's 2 pieces put together. There's maintenance, there's upkeep, just like a regular home. It's a wonderful home to live in as well. And the nice part about it is like you literally could go like a new home build tour and pick out everything that you want. Yeah. I mean, you can go as high end or as affordable as it comes.
You got it. People always mention safety and security when it comes to these. If it's a modular home, then it has to be built to the same qualifications as a stick-built homes when it comes to the foundation. Yeah, so if you saw a modular home built in the last 20, 30 years next to a stick-built home, you would not be able to tell the difference. Exactly. They look pretty much exactly the same. Right. They will appraise pretty much exactly the same. Exactly. They're both considered pretty much stick-built homes. So there you go. 2-1 buy down. This is the last one I really want to get your opinion on, Shawn. We're seeing this a lot. I just made a video on it. Tons of agents are talking about it. This is pretty much where you go from, instead of let's say 30-year, 7% rate all 30 years, the first year, it will be down 2%. So it'll be only 5% the first year, second year, 6%, then the rest 28 years, it'll be 7%. This is not for everyone, but for your specific buyer, savvy buyer, someone who, doesn't mind looking at the market once a year to see they want to refinance, etc. This could be a good product. What's your opinion on it?
Yeah, it's just another tool in the tool belt. The seller has to cover the cost of it. But I mean, I had talked with a listing agent the other day, and I was like, their property's sitting on the market longer. I was like, hey, you could offer, for the seller to cover the cost of a 2-1 buy down for the buyer. And, they'll get a 2% lower rate the first year, 1%, just like you said, the second year, and years 3 and on the same rate. The cost of it is going to be a little less than 3% of the purchase price for the seller to cover. But instead of the seller dropping their price 20 grand, maybe they offer to cover the cost of a 2-1 buy down that and every situation is different, but let's just say the 2-1 buy down costs $8,000 for the seller. That's better than doing a $20,000 price reduction. Then the client can, first year get a 4.5% rate, second year 5.5% rate, years 3 and on 6.5%. That sounds attractive.
Yeah, it's marketing to get these buyers into your property. So I mean, if you have 10K that the seller is willing to move around, they can either drop the price 10K, or they can give 10K towards the cash to close. They can give 10K towards a normal buy down. So maybe instead of 7%, it goes to 6% for 30 years. Or you can do this 2-1 buy down option, which will get it down 2 percentage points and then 1 percentage point. And then, so there's a lot of different options and ways a seller can be able to use that same $10,000 they would have used towards getting their home sold in the mortgage space. Just speaking with the mortgage lender, we can be able to tell you guys more about 2-1 buy downs, about a normal buy down, about using it towards cash to close. There's creative ways to be able to get these homes sold. Anything else you'd like to mention on this, Gabriela?
Yeah, when it comes to 2-1 buy downs, we were talking about it several months ago, and it's just starting to come out a little bit more. But the realtor who had actually asked a question about it, it's like, I would much rather find a way to make the home and negotiate with the buyer than to do a price reduction, because that's going to show up on realtor.com, MLS, whatever, search engine you use to search the home, because it tracks the price reductions. And then, so when the buyer's like, okay, oh, so I see this home's being price reduced again and again and again. And so then from the buyer's perspective, it's like, if you're going to keep dropping the price down, they could become a little bit more, buyer side.
The savvy investors start drooling.
Correct. And then they're like, well, then the question is, well, what's wrong with this home? And then the realtor gets questioned, did you price it accordingly? So the aesthetics, from what it looks like, when you do price reductions, that those are big decisions that the sellers and the realtors have to make. So instead of doing that, if you talk to a lender and start discussing, like, how can I, people always think that we're just representing the buyers and that we only discuss buyer options, but they haven't actually stopped to consider that when you talk to a lender, we can actually give some advice regarding the listing side as well. And this is that tool. It's a resource to discuss with the seller about options that they can offer to buyers. And especially if we have a buyer who's willing to, wants to negotiate and wants to get into that home, and you can eliminate that price reduction on that home.
Good, you got it. All right, so down assistance programs, get between $10K to $25,000 still in the state of Florida. Close these things in 30 days or less. Any questions about those, get with us. Hometown Heroes for nurses, veterans, teachers, etc. Those are very, very good programs that are still out there. Tons of money towards them. And they also have decent interest rates as well in those programs too. So get with any of us if you have any questions about those. Holiday seasons are coming up. So if you're a real estate agent, just understand, really get with those lenders to understand, when the closing disclosures going out, initial disclosures, rate lock disclosures. Just make sure that all the things are taken care of, because when it comes down to it, there's bank holidays around Thanksgiving, there's bank holidays around Christmas and New Year's. Underwriters and processors go on vacation. These are still people. The people that are trying to close a loan, they're still people. They still have families and they still want to be able to go visit people, things of that nature. So just make sure you're really on top of those if you have any loans closing in the next 30 days. Last slide, final thoughts, outlook for 2023, final thoughts on what we discussed today. Where's your head at?
Well, I'm envisioning rates down around 5%. That's my positive thinking.
There you go.
Values adjusting, maybe 10, 20%. I think we have a very, strong housing market. I think overall, from this point to next year, I could, in our areas, I could see houses still appreciating, but if they do adjust down 10, 20%, I think we're still okay.
Yeah. I agree. What about you, Gabriela?
The eternal optimist sometimes, so only the person that cares. Really, the one that cares. All the right components are there for a better outlook in 2023 than it has been. This year was really rocky for buyers and sellers in general, but 2023 is going to be a new year. The shifting market is already, we're already in it. It's already changing. It's already there, and it's just, I really hope that people are getting the right education onto how to better have conversations with buyers, sellers, realtors, and with lenders. So that's always been kind of the goal, is to help educate people in the buy-in process and to, reach out and ask questions.
Good.
The more you know.
Good. I'll say the next 12 months are probably going to be a year of creativity. lending agents didn't have to be that creative. 12 months ago, December this time last year, November this time last year, a buyer comes in, you say you got this rate, and it was win-win for everybody. Agents didn't have to be that creative listing. They get a property, they put it on the market, it's sold within 30 to 45 days. Now it's going to be creative situations. Once again, we discussed the 2-1 buy down. That's going to be, $10,000 that buyer can be able to use can go many different ways, and helps avoid the price reduction, which, like you said, looks bad. Down payment assistance programs for buyers trying to get into the market. If someone's trying to get a new build, maybe not going with the stick built new build because they are trying to drop the amount of production they're trying to do on that end. But looking at more of these factory homes could be a potential different option. To be able to get, a brand new property on land without having to pay the $400,000 sticker price of a new build. There's gonna be a lot of different things that have been going over next year, but having that creativity, working with an agent that's creative about getting you into a home, a lender that's creative about getting you different options to get lower monthly payments, paying off different credit cards, debts, etc. It's gonna be a year for creative things. But once again, Shawn, I appreciate having you on here. I really do. Shawn, the team leader over here, the guy who's been around, the math guy. It's been very great having you on here to be able to speak with us. Gabriela, as always, you're always welcome and a pleasure, the one that cares. So thank you for your assistance. Thank you all to listen to this. And I hope you all have a great holiday season, and we'll see you here.
Thank you.
Thanks.
All right.
Recording stopped.
Okay, you're free to go.
Okay.